Hello, welcome to episode 10 of the Realtors. I'm David Blair. He's Trevin Perez. How's everyone doing today?
Hey, pretty good. Pretty good. Exciting day, exciting week. How are you?
Anything happened this week? What happened this
Man,
week?
I think a lot happened.
Yeah,
And that we care about this time.
exactly. So as you if you didn't hear it, the Federal Reserve on Wednesday cut the interest rate by 0.5% percentage points. This is the first reduction they've had in 4 years. So we'll kind of see, and we're going to talk today about how that's going to affect the interest rates in resale, refinance, all of those things. We're going to talk a little about how the impacts are going to be on both buyers and sellers. So anything you want to throw out there real quick, Trevor, before we get into it?
No, no, let's get right into it. I think our audience they're waiting for our feedback and thoughts on this, so let's jump in it.
Okay. So the first thing I think of is the buyers and how buyers are going to be affected by this. You've got a lot of buyers that have been waiting for this to happen. We thought, and you and I had talked about it, we thought this was probably going to happen after the elections. And the great news is it's happening now. So I'm optimistic that hopefully maybe we get another rate cut, later on in the year, possibly. I mean, which would be fantastic. I think they're probably going to look and see how things respond to this cut. So let's not jump ahead of ourselves. But I think there's a lot of buyers that were on the fence. They were waiting for mortgages to become more affordable, and this is going to be a great thing for them. It's going to, I think, get a lot of buyers back into the market. The rental market has been pretty strong, but I think with rates coming down to a more affordable level, it's going to bring a lot of buyers from all different walks of life, if you would. First-time buyers, repeat buyers. What are some of your thoughts on the buying market?
Yeah, I think that this rate cut sends an incredible, a loud statement to buyers that this is the time to get off the fence, jump into action, take advantage of the pricing opportunity so they can snag that great deal before housing market prices go up. Today was a great reaction from the market. The Dow surged 600 points today, topping 42,000 for the first time. Um, and that's a byproduct of yesterday's news. So, the all signals are open and ready to go. Buyers need to jump in and take advantage.
Yeah. What are rates at right now? The lowest. I didn't get a full view of all the rates today. VA has been the lowest by far for over the last 6 to 12 months. What are rates looking like today? Did you have a chance to peek at any?
Yeah, I don't have a final number from any particular partner lender, but just looking at the estimates that I was seeing out there. So, yeah, I was seeing that 30 years were anywhere from, six to a low of maybe five and a half is
Hmm,
what
nice.
I'm seeing quoted out there. And of course, it depends on, a buyer's circumstances with their credit, their debt to income ratio, and all of the above, right? We're not mortgage lenders, but those are the rates that I was seeing. And from conversations with lenders, five and a half was probably a safe and good opportunity for many.
Nice, nice. 5.5 is nice. 5.5 is where the rates were when I came into real estate back in '99, 2000. Rates were right around that 5 or 5.5%, and then of course they did nothing but go down, from that time period. So that was a good market. That was a good market within that time period. So I'm optimistic that we're going to see some good activity. From the other side, we'll come back to buyers in a minute. From the other side, I will say I had four sellers that we've got listings on that we've had decent activity on that reached out to me immediately when that happened and said, hey, this is what just happened. I'm sure you're aware of it as well. Maybe this will get some good activity and some offers starting to flow because what we're seeing on the selling side is we're seeing okay activity. but we're not seeing the offer. We're not seeing that trigger being pulled in a lot of cases, and I think it's that let's kind of wait and see. So my hope is that on the selling side as well, is that this will allow buyers to go ahead and move forward with a little more confidence in where the market's at, where the interest rate is, where they're, ultimately where their payment's going to be, to go ahead and move forward. Which it's a domino effect. That happens, and then that allows the seller to sell the property, move on to another transaction, and that just kind of snowballs from there. So, you experienced anything like that as well?
Yeah, no, absolutely. I'm seeing several cases where I have a few sellers who are pricing the market to adjust to, in hopes of doing a faster sale instead of sitting on the market longer days
Yeah.
on market like we're typically seeing in some areas, just so they can run and jump at an opportunity to purchase someplace else. Seeing a lot of conversation around the new construction side of things. So I think that again, it's a great opportunity, great update from the market. And to your earlier statement, I think that this is only the beginning. I think we're going to see more as the rest of the year unfolds, especially because the other markets, Europe and Japan, China, and all the other markets took rate drops. We were last
Mhm.
in making that decision. Of course, we control. Control is a strong word, but the dollar is the strongest currency around the world. So, when we bend or take notice and do something, the rest of the world reacts. So this is a great indication, and I think more to come.
That's awesome. That's awesome. So what I'd like to go back to, you made a point about new construction. So new construction, a lot of the incentive with builders as of late has been a rate buy down. They're offering incentives to the buyer to where we're going to give you $10,000 cash towards your closing costs, your prepaids. We're also going to give you money towards rate buy down. So what happens now, in your opinion? Do you think that the builders pull that back if rates are starting to go down? Typically that's not something that's offered in an improved market. So I'm just wondering now if maybe you get a little more closing costs, some different incentives. What are your thoughts on that? As far as, do you think that the builders might pull that incentive back as rates start to adjust?
Yeah, I agree with you. I think there's a good likelihood that the builders will offer other incentives because they do control and have, let's face it, 90% of these builders own the mortgage company
Hmm.
and own every aspect of that business and more than likely publicly traded on the stock market. So the Lennars, the Toll Brothers, these are very large institutions, and so I think that they're going to make sure they give some additional squeeze of the lemon juice and share it with us with our buyers.
Yeah, yeah, yeah. It'll be interesting to see. I mean, I think we've looked at a couple of different. That's me. Sorry, forgot to mute the phone here. The bat line
That's a
is ringing.
buyer reaching out
The
right
it is
now.
it is. Let me look and see. It is. It's someone texting me literally right now, live in real time, asking me about the rates. I got it exactly.
Tell them.
So yeah, I think the same thing. I think we'll see some adjustments with that. We had looked at with a few of our listings. We actually looked at maybe doing that as well, throwing that out there as an incentive that we could entice buyers to come back in. So I think that's going to make it a little bit easier. Now, we're not sitting here saying that rates are going to fall down to 3%. No one is saying that. But an adjustment of 0.5% sometimes, I mean, that's huge in the form of a mortgage payment, and actually getting some of that buying power back that was lost over the last 6 to 12 months, when some of that disappeared. So it's going to be really interesting over the next 6 to 12 months just to kind of see how that filters through all different aspects of our business. So different types of mortgages. Speaking of getting a mortgage and getting an affordable rate, there's different types of mortgages. I don't know that you and I really discussed the various types of mortgages that are out there and available. There's a ton of products. The standard is the conventional loan, the FHA, and then a VA loan. There's also USDA. There's some portfolio loans. I've got a buyer that's actually working with one of those right now. So just wanted to get some of your thoughts on the various types of loans that are out there. If you have a preference, if you have a buyer preference, if you think there's one that's maybe better for a buyer than others, what are your thoughts?
Yeah, no, that's a great point, man. We can go down a big hole here. So obviously, there's the VA loans, which provide the no money down part of it, right? No out of pocket
Mhm.
expense. You get
Right.
100% covered. The FHA loan, which is always a great product if your credit score isn't 100% on par. Like as long as if you're in the 600 credit range, 650, you can get a house, right? So it's very forgiving in the standard of debt to income ratios. You know, if you're a little bit higher than normal, and also if you're lower on how much cash you have available for a down payment, FHA is usually the easy way to go. But then there's some creative options if you're an investor and you're looking at doing an adjustable rate mortgage that's fixed for 5 years, potentially, so that you can hold your rate, and then maybe your strategy is to exit that property in 5 years. You know, depending on what you're doing with the property. Maybe it's a flip
Mhm.
with some minor rehab and then a short term rental so you can grab some appreciation and make sure the market is settled before you let it go. And then, you know, there's a lot of these other creative loans that I don't know if too many people have used. Have you had clients look at and use uh, the FHA 203B loan, which allows you to buy the loan as an FHA with
Mhm.
money in it to rehab the property?
The renovation, the renovate or the rehab loan, I think as it's termed. Yeah, we've got a local lender here. I'll plug him real quick because I've actually used his services quite a bit. Named Jamie Zeitz, that's here locally, and he has actually mastered that loan. He is the probably one of the biggest, not the only ones in our area that actually do that. And I've done maybe two. In my time with buyers that are looking to do that, it's really unique because you can actually go in and when some people say rehab, you think you're buying a complete tear down and you've got to go back in and rebuild the whole thing. That's actually not the way it's set up. It's actually set up to where you can do very small items. You can actually, I've seen it as small as you can go in and say, okay, I want to redo the kitchen, or maybe I just want to, I just want to put new carpeting in or new flooring or something like that. So there's really, I don't know that there's a minimum that I've seen that you can do. But basically, the way that's set up is you go in, you take a look at the property. It allows the property to be purchased in an as-is state, which is nice because you mentioned some of those other loans. What happens when you get out there and you're looking at a property that is in poor condition? Sometimes that takes that property out of contention for a potential buyer. If you're a VA or an FHA buyer, the property has to meet certain conditions to be able to be approved, for that type of mortgage. So I always tell, and I'm sure you do as well, you always tell the buyer of an FHA or VA that it depends if they accept that kind of mortgage. The seller has that option of deciding on whether they want to entertain that type of mortgage for the prospective buyer. But also the property has to meet certain conditional requirements. So things like the roof, flooring, safety issues, things like that kind of come into play. So what that loan does, it allows that buyer coming in to buy that property in as is condition. They can buy it with all of those things existing. They have contractors that are general contractors that are set up through that lender. They go out, they take a look at the property, they give estimates on the work that you want to have done. So let's say you want new flooring, you want that new kitchen, a new roof, a pool. I've seen people actually use it for a pool as well. And then you go back in and you say, okay, what are the costs for this? And then they do an appraisal based on those items being repaired. So you buy the property in as is condition. It allows you to go in and do those repairs after the fact. So they do those in draws. So you close on the property, and then you have a draw to get those items completed. And then ultimately, you've got a house in move-in condition. You bought it, and otherwise you'd be, this as an investor. Otherwise, you would be limited to a certain percentage of inventory that's on the market. So I think loans like that open up a variety of properties that you otherwise wouldn't look at, or that would only be available to a cash buyer. So I think it does give you some flexibility. It can take a little bit longer of a process. I think at 45 to 60 days is typically what I'm told as far as getting that done, because those contractors have to go out, they have to do an estimate on the work that you want to have completed, then they have to relay that information back, and then make sure the numbers work as far as the appraised value, where you're qualified for, that sort of thing. But if you go with a good renovation lender that does that on a regular basis, kind of like Jamie does, then you're in good shape.
Nice, nice.
So the other part of that is so we talked about so FHA and VA a little bit. I had something kind of interesting that happened this past week, and it was an FHA. So FHA, is, they usually have restrictions on the condition that the property's in on when you can purchase it. And we went under contract. They did the home inspection. They came back. They said, okay, this is the list of repairs that we want. We gave a credit for those, but then the appraisal happens. So when the appraisal was completed on the property, it came back subject to. And just so our audience knows what subject to means, is let's say, for example, you have a $250,000 purchase and sale agreement. Appraiser goes out and he appraises it at $250,000 subject to. What that means is that he is giving the value. He's appraised that property at the value, subject to whatever that repair might be. And in this case, it was actually a couple of minor things, some peeling paint, which is kind of one of those red flag items with VA and FHA. And then it also came into play a fence. They actually wanted us to put a brand new fence up because the fence was rotted. So I haven't really seen that come up, but a lot of different things out there. Have you heard anything in regards to, is that a new regulation through FHA that I missed? Did I miss the meeting?
Yeah, I know. A fence? Yeah, that seems odd to me because it's not a part of the structure of the house or the foundation of keeping the house safe and all four walls and a
Yeah.
roof safe. So that's an odd one for sure.
Yeah, it was crazy because I thought initially we got so hung up on the fact of, okay, well, it's going to cost $4,000 to $5,000 to put a new fence up, and during that negotiation back and forth between the buyer and seller, I said, if the appraiser just wants to get rid of, why don't we just tear the damn fence down? Let's just be done with it, and let's just not have a fence there, because they can't require you, at least not that I'm aware of, to actually put up a fence. So I think if it's there and it has rotten wood, you have to get that out. He has to be able to go back and do a reinspection to where it's not there. Well, guess what? If the fence is not there, then the rotten wood's not there. So that was kind of my thought on it. That didn't work out, by the way. That deal crashed and burned this past week. So
Oh man,
we're
because of
gonna
a
we're gonna
fence?
over a fence. We're gonna put it back on the market probably sometime tomorrow morning. But yeah, it's just one of those things that you never it never ceases to amaze me. You always see something new in this market, regardless of how long you've done this. New things come up all the time. So
Absolutely. That's
that's
a bummer,
FHA
David.
and VA.
So David, why didn't you go out there with your handy tool belt on, your lumberjack boots, your hammer, and just get out there and start whacking that thing down or repair it? What happened?
Normally I would. Normally I would. I have actually done some. I've done quite a bit of WDO repair in my day, and I can take care of a small fix to satisfy
Did you say
a home
WTF? What?
I can do some minor work to satisfy a WDO reinspection. So, but yeah, just didn't work out. So refi market. Let's talk about that a little bit. So refinance. You and I talked last year. We both talked about getting our mortgage license. If you recall, we had that conversation because we wanted to go into the mortgage industry, and that didn't work out just strictly because apparently the mortgage industry does not want us to have uber success like that. They wanted us to stay in our lane. They wanted us to stay into real estate. And they felt like, you're doing well enough over there. Leave this to us. We'll stay over here. Despite it not being illegal, mind you, you can be a dual agent. You can be a real estate agent and a mortgage broker. or MLO, mortgage loan originator, as it's called now. It's not a broker anymore. I should know that from the exam, but yeah. So that didn't work out. But during that, we talked about exactly what's happening right now and why we were interested in it, because we felt that the market was going to turn. And when it did, if you purchased a property in the last 3 to 5 years, um, in that time period, you know, well, I say 3 to 5. That's probably going back a little too far. Would you say 3 years, maybe? I think.
I would say three. Yeah.
Yeah. So maybe going back 3 years, and you were at five, six, seven, 7.5, maybe something like that. And all of a sudden, like you had mentioned earlier in the show, you're talking about a 5% interest rate. That's a big difference in payment. So talk a little bit about the refi market and what do you think? What do you think that's going to look like here coming up?
Yeah, yeah. It's funny that you mentioned that story about what we were up to last year. Yeah, it's interesting, right? Because overall, the market really slowed down.
Yeah.
And of all people who felt it, they felt it more than we did, for sure. So I think we thank our lucky stars that we didn't invest too much time and effort into that endeavor.
Mhm.
But yeah, no, on the refi side, it's funny. I was just pulling a stat and just looking at a half point discount on your mortgage. You know, on an average $400,000 home, half a point off that mortgage payment, you know, is roughly $100 a month. And over
Mhm.
the life of a 30-year mortgage, that's like $37,000. So a half a point off is significant. Now, the challenge though with refining within less than a 5 year period, and I had a couple of clients call me yesterday because I've been texting with sellers and buyers all the time about the news, and we're just all like sitting there, you know, with great anticipation as we're biting our nails, like, when is it coming? It's coming, you
Mhm.
know. And so when it came yesterday, everyone was so excited. But part of the mortgage business, they have a smart clause in there that says you have 5 years with prepayment penalties. So if you try to refi it in the
Mhm.
first 5 years, you got 5 points. 4 years, 4 points. If you do it in 3 years, you have to pay an extra 3 points. And then, you know, two and then one. So I was talking to this client who bought 2 3 years ago, and I was like, yeah, you have a prepayment penalty guaranteed in your mortgage. And he later find out he did. After 3 years, you have 2 points left. Now sometimes it's worth eating the fee, maybe, depending on what your appreciation looks like,
Mhm.
right? I mean, you just don't know. You got to look at the total picture. But that prepayment penalty does bite a little bit.
Yeah.
But I think, you know, talk to your mortgage lender, talk to us as agents who dabble and understand both sides of the world, to kind of help and guide you in making the best decision for you and your family.
So talking about prepayment penalties, so do you think, with regard to that, we talked a little bit last week, and we talked about the presidential candidates. Both were talking about different programs they were, um, buyer programs that they were going to work on. I don't know if we had any real details. They talked about maybe 10,000, maybe 25,000 first time buyer credits. So what are you seeing with those? What I've seen in the past is when that's offered, if you stay in the property at least for a set time period, then that's usually waived, and that's anywhere between 3, 5, 7 years. I think that a lot of that money that you're given, as far as either a grant or just funds that are given to you, basically they erase that if you stay in the property for a long enough time period. But in some cases they don't. And then what ends up, and I get that reason for that is that, they don't want to give out, you don't want to give out $25,000 for someone to buy a first time home, and then they sell it in a year, to make that profit on it, basically, because
Right.
they were allowed to take that in there. So you think we're going to see pretty much the same as far as the rules that go with those type of programs?
Absolutely, absolutely. Because let's face it, I think that while the average American needs those kind of programs to help with first-time home buyer scenarios, I don't know about you, but I would say in the 8 years I've been doing this, I would say that it's like 80% of my first time home buyers, they'll start out thinking, hey, aren't there programs out there for me? And I'm like, yeah, there are. And when they start that process with the lender, delving through their debt to income ratio, their credit score, all of that, the front end income and debt, the back end numbers, it ends up being that it's more cost prohibitive to use those grants, and it's more beneficial for them to just buy it as a standard FHA or conventional loan. Like those grant programs are so stringent in their rules.
Hmm.
There's a lot of hoops to jump through. So that's been a feeling I've had personally. Is yes, they will keep those penalties in place because while you have a need for buyers, there's so many investors, so many not savage, but savage individuals. They're savvy, they're savages, they're
Yes.
bougie, and they know how to take advantage of the market.
Yeah.
And they will
Yeah.
take advantage of those deals and
Yeah.
sell quickly and make a
Yeah.
big profit. So,
Yeah, I would agree. It's gonna be interesting. I've got a couple of buyers that are on the sideline right now, kind of waiting to see how some of those programs pan out. There's also a couple of those that actually require credit counseling. They require that you go to like a credit counseling class or things like that. That you have to go through that, and what they're trying to do in that scenario is that I think it's good because what they're trying to do is this is for strictly for I think the majority of those I see like that are the first time home buyers, and what they're trying to do is just trying to prep that homeowner for the real possibility of having you've got a 30-year mortgage. Um, it's a it's a big thing. It's not something to be taken lightly. So I think they want to make sure that the buyers are informed what they're getting into, what's involved with that. Make sure they're going to keep the property because God forbid you should miss payments, go into foreclosure. We're going to kind of talk about that in the next few weeks here. I haven't seen anything into that market yet, but I'm starting to hear some rumblings. So you and I have, we've talked about maybe discussing that a little bit further in the next few weeks as to what that possible market looks like again. I don't think we're anywhere near where it was at once upon a time,
yeah.
but it still does happen. It still exists, and there's two sides of that. There's the side obviously that loses the property, and then from the investor side, there's the side that picks up properties through tax liens and various things like that. So we'll kind of get into some of that coming up. So I don't know if anyone's noticed or not. We've got a little bit new, a little bit of a new format that we're actually using for the podcast today. We're gonna demo that today, see how it looks. I think I look great, but that's I look great on the old program as well. I'm trying to. If you notice, I'm trying to lean in, I'm trying to lean out. And what I have to do for those that are out there is I have to adjust for the ratio of the size of Trevin's head because he keeps shrinking down like he's a garden gnome, and I'm sitting here like I've got the camera right up to my eye, which I don't. So that's something that we'll continue to work on, and maybe we'll talk about cameras. We'll do some camera comparisons. We'll compare the camera that I'm currently using, that you see the nice texture in 4K image, or you'll see the hostage video camera that Trevin's using. As he holds a picture up of his newspaper, giving the date and time of when he was taken into captivity. So,
We're eating
so
cats and dogs over here. The savage. Hey,
the
real
cat.
quick, before you switch gears, on the foreclosure numbers, I had that stat in front of me. And what's interesting for all of the United States, foreclosure filings are only up to about 3%. 3% increase from the previous month, but a 7% decrease from last year.
Yeah,
So yeah, the industry is doing a great job of keeping foreclosures down.
yeah. That is good. That is good.
Yeah.
So Kiss Mary Kill. We didn't draw anything up for that, but the last three things are on there were FHA VA conventional. I think we've done that before as far as covered those as far as loans, haven't we? Have we done that
Kind
before?
of. Yeah.
Yeah.
And we sort of
Okay.
covered it here in pretty good detail as well.
I think so. I
Yeah.
think we're good. We'll pick that up with a new topic next week. So
Or we can go back to the last topic that we loved so much from last week.
which was what was that one? I forgot already.
Oh,
It's been a
drum
busy week.
roll.
It's been a busy week.
That was the TV stations, the cable network news, because it was politically stimulated. Would you like to redo all your answers, sir?
No, I would like to double down on those answers actually. Because what I find interesting is that we talked about it, and I told you, I said it was topical, and I said, and this involves the rates. And what happened? Mic drop. What happened? What happened? The
It had
rates
nothing to do
plummeted.
with
Based on this
those
podcast,
networks.
the rates just completely
It
plummeted.
did. It
Yes,
did. Well, yeah, no, I give you full credit for that. This
yeah,
podcast is very influential in the Federal Reserve Bank's
it is.
decisions.
It
Yeah.
is. It is. Somewhere, in some meetings, they said, look, this show, the Realtors, that has a handful of subscribers at this current time is really going to be influential in the future. so, so right now we're going to throw them a bone. We know they're chirping about the rates. We're going to throw them a bone, and we're going to see what's going to happen later on down the road. We need these guys in our good favor later on.
That's it. Yeah.
Just my opinion. So,
Yeah. I
well,
agree.
I like the new format. We'll see how it is on replay. It says it can go up to 4K on the recording. So we'll see how that looks. Next week, what are we talking about next week? I know that's a long ways away, but any teasers you can give the audience real quick as to what you want to talk about next week?
Yeah, no pressure, right? No pressure.
No
I
pressure.
think that we should leave it as a surprise.
Yeah.
Honestly, I think that we're going to see some more inventory hit the market. Maybe we should talk more about pocket listings. Maybe talk about cash offers,
Mhm.
and a little bit more about those strategies.
Yeah, it's interesting to see how what like I said, what that domino effect is going to be later on for interest rates. Hopefully taking a good bump down, and then how that's going to affect the rest of the market. There's a lot of moving parts to that. We're both from that world of the cash buyer, so I'm interested to see how that may affect. I think that is going to it's interesting because I think that will have an effect from the standpoint that you and I have had conversations with sellers that want to sell for cash, and a lot of times they can't or haven't moved forward because the interest rates were too high. We both heard that as a conversation, so it will be interesting to see going forward what that's going to look like, if we're going to see some adjustments in that to where someone says, things are going to be a little bit more affordable now. Maybe I can go ahead and sell. So we'll see.
Yeah.
All right. Well, that's all I've got for this week. Thank you for your time. As always, go to at the Realtors on YouTube and subscribe. Like our content. If we're doing a good job, if we're doing a bad job, you can text Trevin directly or send him an email.
Signing off.
Have a good week. See ya.
Take care.